Hey everybody, this is Calvin Waite. I trade crypto for a living. I'm not a registered or licensed financial advisor, planner, or broker, so nothing on this channel should be taken as a recommendation to buy or sell. I also trade all of these things, so I probably have a vested interest in there. But there's plenty of entertainment value and lots of education, so this will be awesome. For those of you who didn't know, my subscription channel is live. So look at the link in the description over at cryptoinfluencers.com and you can see how I make all of my trades and what I do and what I think about everything. This channel is for more hypothetical and looking at trends, and the other one is for actual trading, so you might be interested in that. Hello everybody, good afternoon. We are about, let's see, we are 5 hours from Bitcoin's close, and I wanted to talk about a variety of things today because today's a super important day for quite a few reasons. What we're all looking at right now is an extremely zoomed out view of the S&P. This is the SPY, and we're going from 1997 to current, so we've got many years here. And we don't need to see all of these days, but I kind of wanted to look at our 200 week. So the 200 week moving average on the broad markets is here. This is before Bitcoin was ever around back in this area. But it has, the 200 week, we broke back below it in 2001. That was a kind of a huge event. And then it took until 2004 for us to finally reclaim it. And we found it as support quite a few times. I'll zoom in just a teeny bit so you can see. You can see how we interacted with it, but mostly stayed above it and finally got off of the ground there. And then we had another period here where in 2008, we had some serious financial woes and we interacted with it several times and then kind of lifted off a bit and then lost it completely and lost the rest of the market at the same time. So that was a big event. It took us, the first time we dropped below was in January of 2008. We finally climbed above it for the first time in November of 2010. So it took us a couple years. So we found support on it back in 2011, and we have essentially found support on the 200 ever since. There've been a couple of times. This was kind of a close swing down in 2016. This was this is in 2018. The COVID crash was just pure adrenaline, so we did break through and found support on the 100-month moving average, but quickly reclaimed the 200. And right now we are doing an attempt. So this attempt is our first almost touch. So if you look right here, this is my number. If you can see my crosshairs, that's the number we're looking at today. So 358.18 is SPY's 200 week moving average. And our low for the day is 359.13. So we are about $1 away from touching it. But to be honest, we don't have to touch it. We just have to get so close that the rest of the market and most technical analysts will assume that it is a support. So we are essentially 56 minutes from the end of the trading day in the stock market, and we will likely start another week somewhere here. This back when we broke it during the COVID crash, it was just pure insanity. And the difference between Friday and Monday was a giant gap. Most often when you hit against a very significant number, we're dealing with a usually there has to be kind of a touch, and then you start the new candle below it, or usually our first touch, there should be support. And this is what I'm kind of banking on. I know there's a lot of bad news out there, but I don't think there's a ton of new reports coming in next week. And I'm betting we get a temporary reprieve from this downward movement that we've seen over the past 8 weeks or something. And why is that important? Well, it's because Bitcoin tracks the S&P very, very closely. So I'm going to pull in both really quick, and we're going to look at today's price action. And we're going to look at so the 5-minute chart, and we're going to zoom out to pretty much just today. So from the 30th, there. So you can see on both of these charts that S&P rises, Bitcoin rises. And in fact, this morning, Bitcoin climbed above 20,000 and hit a high of 2177. So this is pretty high. And then as the S&P drops, Bitcoin follows suit. And then there was a bottom, and S&P rises a bit. And now this is where we start breaking away. So Bitcoin does drop with the S&P here, but we had a few green candles here where the S&P just kind of continued in its continuation. And this one, it remained flat. And by the time this sell-off happened, the S&P is way below this support here, where we found our prior support and kept it. So there's a difference. There's a sentiment, emotional difference between Bitcoin and the S&P. And I have about a handful of different reasons why this is the case. Bitcoin wants to go up today, and I will show you why. It's right here. So let's go back to our daily and see what the price action has been like lately. So those of you on the Pro channel know that I trade candle bodies. And the reason I trade candle bodies is because all of these wicks, all this intraday volatility, they give us a lot of good information, but they don't tell the exact, they're essentially, how do you put it right? The people or groups, the whales or individuals that have enormous worth, they're the ones that are dictating the true outcome of the chart. And they do that all throughout the day. They move prices in a certain direction, and then right at close, they essentially put these marks in the sand. And I was just showing, if I take away the candles, and I showed this to the Pro channel last night, and also I figured out how to do this too, how to find the right buttons. I'm just going to make this an ugly color, but just make it really super visible. You can see where my supports are, and you can see where my resistances are, and you can see how everything plays so nicely. A little slip here, but breaking through, finding resistance, perfect support, slip through, support. These trend lines follow closes because it's the whales and the large money movers that look at close, and they will dictate where price should go based on closes. So that's how I trade. That is a major piece of what I'm doing here. Well, you can see that we've started to curve upwards, and this is very, very significant. This curve upwards is completely different than what's happening in the SPY. Look at this. SPY has no relief, like it's been going down without a break. Bitcoin is showing strength, and as much as Bitcoin follows the S&P, it's almost like it's almost like lately, because the S&P has been dropping, everyone who knows about crypto and really understands what it is kind of has to suffer through the market, through the trading hours, and they just can't wait for the market to close so that Bitcoin can do its thing. Bitcoin is meant to be a hedge against inflation, and it should be an alternative to irresponsible government financial policy. And that's the way I've always looked at Bitcoin. It's limited in supply. The inflation rate is 1.74% annually currently, and in 2 years it'll drop in half. And so all of the properties that make Bitcoin attractive are essentially in direct opposite to the legacy banking system. And so those who are trading it really don't understand what it is, because it shouldn't be moving move for move all the way through like that. So, but it does have its own rhyme and rhythm, and it isn't impacted by the amount of money people have. If people are starving to death, they're going to sell their gold and their Bitcoin and their stocks to eat. So a tough economy is tough for everything. But this is historically the time frame of the lowest of the bottom of a market. So there are a couple things that are really, really important. First of all, the 20-day moving average, which is this darker color, we dropped below it back on the 13th, and we've had resistance on it for a long time. And this average is important because lots of traders use it in their finding shorter term swings. So the 14th, it's been 16 days. It's been more than 2 weeks that we've traded below this, and it's a little jagged, but right now it's dropping fast. And the reason it's dropping fast is because we are including 2 of these days. Yeah, 3. We have three highs, 1, 2, and 3, that are factoring into the 20-day. In the next 3 days, these will be replaced by lower candles. So that means that the 20-day moving average is going to be dropping for the next 3 days. And the 9-day, which is this little green line, it tracks most recent price action, and we're probably going to have a cross in about 3 days, which is strength. What I'm watching to see, because this 20-day can be pretty pivotal, once we get above this and start switching sides on the people that are trading Bollinger Bands and other things, this can really move us in the right direction. So getting above that is a huge step, and we've barely started. I mean, if you look at our downturn from 22,400, we're barely starting the other side of this upward movement. Yesterday we had a bullish close. The day before that we had a longer tail than the top, so this would be bullish. This is absolutely bearish, but this is a bullish engulfing candle. This one is finding support here. I mean, this is bearish, but it's finding support on our trading range. This is absolutely bullish. This move down and up is a bullish engulfing, and this was a bullish candle. So we have a ton of bullish candles in here, and they're all saying that it's time to go up. And the reason why we've struggled is because the S&P has kind of kept us down. But there's enough here, there's enough signals in these charts here that the whales are saying it's time to move up. And so that's some important information. The other thing is, today is September 30th. So it is time to look at our monthly chart. Our monthly chart ends in 4 hours and 46 minutes. And this line is on the daily. Actually, I think it might be on the weekly. I'm gonna just take it off of the monthly, because it doesn't make sense on the monthly. But I'll tell you what does make sense on the monthly. Actually, let me change charts to one that has a little bit more history. Look where we're trading. Do you guys remember what this golden line is? This golden line represents our all-time high in 2017. So the all-time high in 2017 is at play at the end of our month. In fact, it's been in play for the last 4 months. In June, we landed above it as support, like barely. So I'll tell you, so this is the price, 19,676. This 19,676 is the price of our all-time high on, this is Bitstamp, but Bitstamp has the most history of pretty much all of the charts. And so that's the one I've used for really long-term projections and things. But this is unbelievable. I mean, this is the top. And our close here was just above it, 19,924. So it was about $300 difference. And on a candle that was $10,000, I mean, a couple $100 is unreal. Like that's essentially a close on that line. Then we found it as support, but weak support. And I told everyone what a weak bounce this was. And if we had moved above the 50% line, it would have changed everything. But because of its weakness, we had another weak month in August. August closed slightly higher, but still ridiculously close. It was $2,000, $2,059 is where the close was. So even that was within $300 or $400 of our all-time high back here. So we are interacting with this in a major way. And right now with 4 hours and 43 minutes, I don't expect the market to move too far. And we will likely close fairly close to this line. Well, that would be fantastic. And I'll tell you why. Right now, what we're looking for is kind of a bottoming candle. And you know, if you look at the top of this swing, let me click off of stuff so you can see. Bottoming candles either have large wicks. So let's see. Well, not necessarily bottoming candles, but directional change candles. And you don't always get them, but this was our top candle, and we had a long wick here. And then we're looking for a bottoming candle. This one possibly, these are possibly, you know, they're pretty tight range, but they're not perfect. And it was this one here that ended up being the bottom candle, but we had to wait for a long move down and then find something with a decent tail on it. And then we traded in a tight range for a few months, and then we were off. But what you're either looking for is something with a long tail on it, or a long high, or you're looking for a doji, something that has an open and a close that's really, really close to each other. So we got it here. This one wasn't perfect, but this became our move. But look what we're forming now. I mean, we've had this move down from our all-time high, because this was it. We've moved generally downward all the way through, and we're looking for some kind of bottoming candle. And if this turns out to be a perfect doji in like 4 hours and 41 minutes, so a perfect doji would close at exactly what was our open. The open was 20,049. So if we get just as close as possible to 20,000 by the end of day, whales will have essentially signaled that this is it for this downward run, which in a 4-year cycle, this is the month for the bottom. We've already showed you the chart with all of the averages, and it's October that's usually kind of the final straw before things start moving. So this is amazing. This is really great. At the beginning of the month, I said I hope we get a long tail down and a nice support. I don't care if it's a green candle. I just want it to be a bottoming candle of some kind. And I think we've got it. We have about 4 hours, and if we don't move much from here, we technicians will look at this and go, a doji at the bottom of a years long downturn. This can potentially be a momentum changing candle. So that's fantastic. And that happens today. So we are playing with 2017's all-time high, and we're doing it in such a way that it sets us up for a really incredible month next month. So if we can just break the shackles of the broad markets, then we will be in great shape. If the S&P finds support off of the 200 week and gives us any kind of green, like if the S&P is like, oh, you know what, we're going to bounce for just 1 week before we continue to die, Bitcoin could do so much damage in that week. If we had 7 days of kind of unrepressed upside, Bitcoin could really run, and it might turn some heads, and it might actually pull some money out of the rest of other markets and into Bitcoin. So we are kind of getting ourselves into a pretty nice situation, a really nice setup for the next week or so, and potentially a couple weeks. You never know how markets will play out. But there's just a lot of psychology, a lot of broad market psychology at play. And it's really fun to watch this playing out. You can see the little smile on the 9. If we stop at and start a new candle on the other side of the 20, or if we can put in a nice candle, if we were anywhere up here, that would be just perfect. And it would also be an acceptable way to break a candle, a resistance like this. So we've got those things happening. Now, there's one more thing. It's a little hard to see because of this. I'm going to take off all of my lines really quick, just so you can see it. Look where our 50-day moving average is. We are right here. This thing is dropping fast. The 50-day, we are at, let's see. Oh, I've closed it. The 50 right now is trading at exactly 20,620. So this thing is dropping about $75 per day, $75 a day. And that's because we're replacing candles up in these ranges. So this is the end of the highest range that we've traded at in quite a while. We're replacing these high ones with these low ones. And so the 50 is coming down pretty good. Well, if we're essentially trading within $1,000 of our 50 again, and we have momentum on our side. So in the next week, it is very highly probable that we're going to be interacting with our 50-day moving average. And as you all know, a close above this 50 is an exit of the red zone. And what's interesting about this, so we've had exits of the red zone back here a couple times. They were all kind of in the same area, and then we hit this yellow and things kind of fell apart, and then we just got into this new level. So this was one level of exiting red zone, sort of some fake outs, and now we moved out of the red zone here and potentially here. So we have another range. It's all in the same range, but usually Bitcoin doesn't give us that many fake outs. So it is time that the 50 holds. And when the 50 holds, Bitcoin is ready to go start its slow upward movement. This is what it has always done all throughout these 4-year cycle periods. So I'm really watching with anticipation to see when we exit the red zone on this next move. And it's coming. It's coming very soon. We're within about a week of that happening. So we have a lot of amazing things happening. But yeah, I showed everybody recently about how this Wyckoff spring was in play. And the next phase after phase C, which the focal point is this spring, is the sign of strength phase. And so if Wyckoff is in play, we are bullish to the point of breaking above this 22.4. So it has played out. This spring happens at the end of a consolidation period, and we go right into this spring. It is easy for whales to take things up fast when they're ready, and when they're ready to convince retail that we're doing something else. But I mean, look at how many large candles are in our price action here. We have lots, and I'm expecting a large green candle in the next few days. We have the structure, we have the formation, and the ones to put that green candle in play are whales, and they know exactly what they're doing. So right now we need a fairly passive close, because it's month end, and as close to that doji as we can get it is perfection. But yeah, I am absolutely expecting markets to be moving up into a higher range quite soon. And I wanted to point out that Ethereum is next. I mean, it'll move with Bitcoin, but I kind of wanted to bring this back and kind of remind you what an event the merge was. So the website here is ultrasound.money, and you can see that the merge happened, let's see, it was the 15th. So we are officially more than 2 weeks away from the merge. And this chart just tells so much. Okay, so since the merge, we've had an additional 8,674 Ethereum added to the total coin supply of Ethereum. Well, if the merge had not happened, there would have been 192,708 that would have been added to the market. Like, that is, I mean, from a fundamental standpoint, it is unreal. And over here on this chart, you can see this is Bitcoin. Bitcoin's supply has increased 1.72%, so it's moved up along this straight line, and it'll continue that all the way until the next halving, and then it'll drop in half, so it'll be around 0.84 or whatever it is. I think I've looked it up, if that number's right. But look at Ethereum. It's unreal. The fundamental change here is just absolutely incredible. So I'm gonna just kind of show you a little bit of math. So let's go to before. So I'm taking the 192.7. I did 14 because I can only type so fast with those numbers changing. And I will subtract out the 86.72, 73 I'll say. So this is what is missing. In our prior, if Ethereum had continued on the way it was, we are essentially missing 184,000 ETH. It's essentially a burn of 184,000 ETH. So if I just multiply this by our current price, which is today around 1350 or whatever, it's $248 million of Ethereum. So how does a market work? A market works in that the buyers and sellers have to find some kind of equilibrium. And if there is a bunch of buying pressure, if the selling pressure and the buying pressure is equal, the prices don't move. So so back in here, this means that holders and buyers are essentially absorbing more than what people are dumping onto the market by, every 2 weeks. We've just discovered that that's about $250 million. So when prices are going up, not only do we have to overcome the $250 million, and that can be miners holding, But you know what? They have bills. They have things they have to pay for. So that means there's a fair amount of active buying to overcome that every 2 weeks. 250 million, a quarter of $1 billion every 2 weeks had to be absorbed by buyers. And to move the price up, there has to be additional money put in to actually, change the value of those prices. Well, if all it takes now, so if we're missing $250 billion, that means that our sell pressure has decreased by a quarter of $1 billion every 2 weeks. And in fact, our sell pressure now, let me just go back and do this, 8677 times 1350. So our selling pressure is down to 11 million every 2 weeks, like less than a million per day. And I can't even tell you, once the broad market starts doing a markup and starts pushing Ethereum, there is so little standing in its way. I mean, the people that were calling for a $10,000 Ethereum and all these kind of numbers, $20,000 Ethereum, it feels pretty far away from our 1350 right now. But just wait till this market gets going, because when retail and the rest of the grassroots groups, along with the big money, I mean, big money FOMO is just as bad as little money. Big money makes mistakes. Just look at hedge funds. It's like these dudes that are like 30 years old, just with no concept of risk management, destroying themselves. It's unbelievable. But there's a lot of money that, once convinced, will start pushing markets, and it's unreal when it happens, because it's just, you just feel this rush, and there's so little. What this means is, once we can convince the world that Bitcoin has found its bottom and it's starting a slow accumulation and starting to move up or into higher ranges, and it's ready for its markup, Ethereum's going to get very slippery, because there's not a lot of selling pressure. There's less selling pressure dumped on the Ethereum market than there is Bitcoin. So Ethereum's going to get very slippery. It's going to move faster than Bitcoin. And it's going to be really, really fun to watch once we get going. I mean, we've played with the 200-week moving average for this is 9 bars, so I guess I don't want to exclude this one here. So it's essentially, we're about 11 days, 10 or 11 days of interactions with the 200-week moving average. You realize we're not going to be down here for forever, right? Like, let's see, I probably should get to a different exchange. Anyway, you get the idea. The 200-week is something that we just don't interact with very often. And we're here. Like, this presents a very good long-term buying opportunity. I mean, obviously this channel does not, I'm not telling people financial advice. I'm not accredited or licensed to do that. But look at the history of this thing, and look at the fundamentals. Look at the money supply change since the merge. I mean, it's unreal. There's just some incredible things happening out here in the market, and there are a lot of people that are depressed, thinking that Bitcoin is going down to 10,000 and the rest of the market's coming with it. And you know what? I think that there would have to be some significant changes in the shape of the market for me to believe that, or to go along with it. And what I'm seeing right now is not showing that. And my first clue that we weren't was when we started following that Wyckoff accumulation to a T, and this was a fake out. If we had lost this and put in some serious red bars, we'd have gone there really fast. But it's not. And I think that is at this point, I think it's off the table. We would have to close below this again for me to think, yeah, we're there. But at this stage in the Wyckoff accumulation, we are preparing for markup. We're looking for a show of strength first, and I think we could get it fairly soon. I think we're within weeks of that happening. So man, just a lot of cool things. We're just on the verge of some really exciting things. For the impatient, trading sideways for 2 weeks is pretty grueling, but I guess I'm just that nerdy. I've watched this go sideways for 14 days, and I am reading every single movement, every shape of every single candle with anticipation, because we get new information every day. And you guys can see this, right? I mean, the trading range is higher than the trading ranges all the way through. I mean, maybe this one, but our high is higher. Fundamentally, today's price action, we finally left the 200-week moving average. There are some positive things. We haven't even seen the upside of this next move. We have legs down, we have our support, and then we have legs up. The longer the support, the stronger the next move. So it's just, I mean, this is all calculated, and we haven't seen the leg up yet, but it's coming. So really fun. All right. Yeah. So anyway, I haven't done a free video for a few days. Just a lot's been going on, and I've had to, take a step back where I need to. But I want to remind you all that I do my pro video every day, no matter what. And not only do we talk about all of these things, but I'm actually showing you my real-time trades and exactly the positions I'm taking and how to manage risk and all of those things. So hopefully those that are watching, that are interested, can come and join us. But either way, I think we're set up for some pretty good stuff here. And with it being Friday, just want to wish everyone a happy weekend. I will likely get a video out tomorrow, so hopefully I can get onto a good schedule. But yeah, good times. This is that really critical, pivotal portion of the market where people that are watching really can get an enormous opportunity out of this market. So things are coming. All right, guys, we'll talk to you later. Thanks for making it to the end of my video. Make sure you keep those trades small. Don't force a trade. Don't get impatient. And if you want to see how all this works, please come over and check me out on the subscription channel at cryptoinfluencers.com. Again, the link is in the description.